puts and the bull spread. So today we're talking about covered calls. Tom, please help me out here.
Yep.
Okay. So what is covered calls? We discussed about this with Tom that said covered calls is when you own shares of a stock and sell a call options on that stock. This means you're agreeing to sell your stock at a certain price if the buyer of the option decide to use it. You get paid upfront for selling the options, which gives you some income, but it also limits how much you can profit if the stock's price goes up a lot. It's a way to make extra money while holding into your own stock. So covered calls is you own the shares, you're selling a call for a passive income. And normally the goal for covered calls is a continuous passive income, and hopefully your strike price will not trigger because you would like to do this multiple times, right? Okay, what is the basic requirements for covered calls? Tom discussed about this, that we need to have at least 100 shares to write a call options because 100 shares are equal to one contract, right? And brokerage account. And also not because just because you have all those shares doesn't mean you are allowed to do covered calls on your platform or your brokerage. So you have to make sure that you are allowed to do a covered calls. And I think you need approval, and we discussed this before, and we have like a little controversial issues in regarding to this. So you need a brokerage account that allows options trading. So some broker may require approval. It's actually based on your experience and your money. Okay. Tom talks all about this. This is just a very simple way of discussing what is covered calls on Miss Mary's very basic class. So tips to finding good covered calls. Number one, stable stocks. So we have to look for a stocks that's low volatility. What is low volatility? Is Tesla considered low volatility? No. Tesla has a high volatility. However, higher volatility stocks gives you a higher premium. Correct, Tom?
Correct. Big premium.
Exactly, big premium. And low volatility will give you small premium. It just depends how you want to start. But if you're a beginner, you start with a very low volatility. Instead of using your Tesla for covered calls, perhaps use TSLL. This is just an example, right? And we also want a stocks that it has consistent performance. You want to see it's going up and going down. You know, you don't want to see it continue to go down if not unless you are going for selling puts. You don't want a covered call, right, Tom? You don't want a trend going down for a covered call. You want like a slightly steady and slightly slightly bullish, right, Tom?
Yeah, you want something that's, and the great thing about cover calls is it doesn't, it can be slightly um
Sideways.
bearish, it can be slightly bullish, it can be negative. One of those three will make you your money and get you out. Yep.
Yeah, you want to like slightly upward and sideways, right? You really don't want like slightly bearish. I mean, fully bearish, because then you will have like a very minimal premium, right?
Correct.
So, the second one is you have to check your implied volatility. I think Tom discussed this again. The higher volatility, it means higher premium. Lower volatility, less premium. So you just have to balance which one you want to do. It's either higher risk, but higher premium, lower risk, lower premium. And Tom again, he said dividends. That was actually a good point. Why dividend, Mary and Tom? Why? Because one, you're earning income from dividend monthly. You get money from that. And then you also get that covered calls premium monthly. So you're getting two passive income if you choose to go with a dividend stocks instead of just a Tesla or Nvidia. If you go for what MSTY, they provide very good dividend, right? Right, Ertuan? Ertuan is really good.
Yes.
So I think if you consider dividend because it has a regular dividends could provide you an extra income and then premium for your covered call. So that is two income if you choose dividend stocks. It's a win-win, right?
Well, yeah, and one of the things you got to watch with dividends too is, right, a lot of these stocks will rise right before dividends, right? Because people want to jump in and grab the dividends and get out. So you be mindful of where you set your covered call, because if it does, break above it, there's a chance you could get, those stocks taken away during dividends period, and then you would honestly lose on both, right? So make sure you're when you're doing over dividends period, you're setting it high enough where um, either you won't get called away, or if you do get called away, you're gonna make a decent amount of money if it does happen.
Yeah. And we also, what is the next one that we try to avoid during earnings? I think this is a bit scary. If you do a covered calls during earnings, there's a higher chance that you will exercise that expiration date. I mean, that strike price. You will exercise the options because when there is an earnings, there's a higher chance that what if they beat earnings, then you definitely have to sell your options, right, Tom?
Yeah, and again, as long as you're above your what you bought it for and you're good with it going away, that's fine too. But if you're say underwater on that stock and earnings come up, I would stay away from any cover calls, and just wait until it goes past and then go start doing it again.
Yeah. So basically what we do, you set a realistic strike price, meaning you have, let's say well, first of all, you have to know your support and resistance, right? And let's say the resistance of this particular stocks is $15 and it's been respected multiple times. You set a little above that resistance. Instead of putting 15, you put like 17. So your goal is not unless you want to sell it, your goal is not to trigger your strike price, because your goal here for covered calls is to have continuous passive income along with your dividend if you choose to have a dividend covered calls. And then they also said to use the screeners like bar charts, covered call screeners. They have that. You just go to barcharts.com. I think that's what it is. I don't use it, but I try to find what is the best way to find a covered call screeners, and that is the most popular that I've seen so far. So you guys could try it. I haven't tried it. Tom, do you have any kind of covered call screener that you could share?
No, I mean, I use either Market Chameleon because I like their filters. I can look for the stock first, and then get a list of stocks that, hey, I may be interested in, and then go start looking at their cover calls. I kind of do it on my own. Number one, it gives me that extra um, added, review how to review stocks on my own rather than somebody just handing it to me.
Mhm.
And then I also use, I don't know if you guys have ever used Tip Ranks is another great one where you can go in, and if you're looking to double dip like on the dividends, go use their dividend screener, right? Find ones that pay decent dividends, and then cross-reference that and see if they've got cover, if they've got good call options too. That's if you're going to double dip, that's a great way to do it. Find the dividend stock first, and then find out what their options are for calls.
Well, or you could start to whatever shares you have. Let's say
Yeah.
you have SoFi and then you have 100 shares with that. Start with that. Start with 100 shares, do a one contract covered calls, and it go from there. The only way you lose money is when the strike price, when the market hits your strike price, you have to exercise it. It means you have to sell your shares. However, as long as it never triggers your strike price, you will get to keep that premium,
Yep.
right?
Yep, and as long as you're above your cost, right? As long as you're above your cost, it doesn't, and I've had stocks that I've fallen in love with. I don't know, I don't want to take it away, but this is a money game. This isn't a I love the stock game.
Mm-hmm. That's true. So start with whatever shares you have, 100 shares of SoFi or TSLL. Don't start with your lucrative stocks like the Tesla. That's a very high premium, which is good, but Tesla is very high volatility. So if earnings coming and your strike price is too close to hit, it will trigger. So start small to those people who wants to do covered calls. It's an extra income, $43, $45. I think TSLL, I tried to take a look at TSLL for you guys, and it's like covered calls for 2 weeks. Actually, that was 2 weeks ago. It's cost you like $45 as long as it never triggers your strike price. It never hit your strike price. $43 for one, so that's not so bad by just sitting there. If you have like 100 shares sittings on your portfolio, do a covered calls. And Tom will share us how to enter and how to do paper trade with that. So what about Greeks, Mary, when it comes to covered calls? The good thing about covered calls is the Greeks aren't strictly the focus when you're doing covered calls compared to like buying options. Because when you buy options, you take a look at the delta because how much profit you will gain after $1, right? Once you reach $1, that's you wanna see how much money you're gonna get. For delta, you're actually looking for delta because this is the probability of options, whether your options will be exercised. So I think Tom discussed this 2 weeks ago. You would like to have a lower delta, which is 0.2 or 0.3. What does that mean? It means there is a probability, a lower probability, about 20 to 30% that call options will be exercised. If you choose a higher delta, let's say 0.5, 0.8, 0.9, that means that 0.5 is 50% or 0.9 is 90%, which means it is 50 or 90% probability that call options will be exercised. What do you mean by exercise? It means your strike price will trigger and you have to sell your options. I mean your shares, excuse me. Right, Tom?
Correct.
So the higher delta options have a greater chance of being exercised, meaning you're more likely to sell your shares at the strike price. So for the Greek on covered calls, you look at your delta. You would like to have a lower delta to those people who's just beginner. Let's start with the beginner, okay? Let's start with covered calls beginning 101, beginner 101. So look at your delta. This is not a buying options. This is selling options. We're selling covered calls. So you look up 0.2 to 0.3 is the lower delta, meaning 20% to 30% probability it will be exercised. So, and then you look at the theta. And guess what? We all hate theta. However, this is covered calls. Your theta is actually your friend here because you would like to expire your options without triggering your strike price. So you would like your covered calls to expire worthless. That's what it is, right?
Correct. Yeah, Theta's your friend on cover calls.
That's correct. Theta is your friend for your covered calls. So it favors you when you're selling your covered calls. And then the delta just give you the insight of like whether your options will be exercised, so you can set your strike price or what else? And see the probability if that options will be exercised. Oh, there you go. We talked too fast. Theta is good for the sellers. Why? Because theta is particularly useful as time decay works in your favor when selling covered calls. As time passes, the options loses value. This is actually an advantage for covered call seller because you get to keep the premium you collected and the options becomes less valuable as expiration nears. Remember, the extrinsic value or the time value of a covered calls decreases as the expiration date approaches. It happens due to time decay. So the extrinsic value is the time value. So as the expiration approaches, the extrinsic value of your covered calls decreases. But you want that to decrease. You want that time decay because you want to keep your premium. The covered calls, you get to keep the premium and you get to keep your shares as long as your strike price is not triggered. Questions with that? Very simple so far. Okay, let's do a scenario. Let's say we're buying a covered call for Tesla. This isn't hypothetically speaking. I know Tesla is not trading $50, okay? So you own 100 shares of Tesla stock, currently trading at $50 per share. You decide to sell call options with a strike price of 55. So you have 100 shares of Tesla and it's currently trading $50 and you would like to do covered calls. And expiration date's 2 weeks from now. And when you're picking a covered calls and if you want to have like a continuous premium, I think you could do like 2 weeks. So what do you suggest, Tom? 2 weeks?
How far out?
Yeah.
So keeping this simple, 30 days is usually my target, right?
30 days. Okay.
Yeah, 30 days. Now you do have the ones that have weeklies, and I don't want to get anybody too in depth in this, right? But you do have weekly ones. Those are usually the ones with the high IV, and you can do those weekly also. But I'm gonna say most of your ones are gonna be 30 days, 30 to 60 days.
Okay.
Yeah.
But if you know your support and resistance and you think that within that 2 weeks is not going to trigger, why not take it? And also your premium varies on your strike price, right, Tom?
Correct.
The longer your your expiration and the higher your strike price, the lower your premium. Right? I'm
Say
just
that
trying to
again.
get a confirmation from Tom. The higher expiration, I mean, the longer the expiration, the higher the strike price, the lower the premium.
Correct. Yeah.
All right, so scenario is 100 shares of Tesla and it's currently 50. You have a strike price for $55, 2 weeks expiration. All right, here comes your scenario. So price did not hit the strike price. So scenario 1, the price did not hit your strike price. So Tesla stays below 55. As long as Tesla stays below 55, the options expires worthless. You keep the $200 premium of your share and your shares. So there's a premium of $200, so you get paid upfront, right? You get paid upfront, and then you wait 2 weeks. As long as the $55 never triggered, you get to keep that $200 premium. However, second scenario, what if the price hit the strike price? If Tesla exceeds $55, the buyer exercise the options. You sell your shares at $55, earning $5 profit per share plus the $2 premium. Okay, what is that $5? This is because this is from the 55 minus $50 that you currently have for Tesla. You bought Tesla at $50, but now you have to exercise the options. You have to sell it for $55. So that $5 is $500. Plus, you still keep the $2 premium, which is $200. Remember, it's always multiplied by 100. So the only upside with hitting your strike price is you have a limited profit instead of, right, Tom? You have a limited profit because you have to exercise it and you're only limited to that $5 because your strike price is only 55.
Correct.
Regardless, if this price hits $60, you could only sell it at 55.
You have to sell at 55. Yeah, you don't get that extra value. Correct.
Yeah. So, but you get to have $700 profit. You got the $2, which is 200 plus your profit from your shares. So either or is still a win-win. You just have limited profit on the strike price when it hit it. Questions on that? That is very simple.
One thing, Mary, I think somebody posted in Navina. Navina said longer the expiration, higher the premium. So yeah, you're correct on that, Navina. But Mary's question was the longer out, the higher up you go, right? So the higher up you go, that's going to reduce the premium, right? The farther away you get from the actual stock price. Yeah, you're right. If you're picking the same same price. If you do $55 and you do a month out versus $55 and do 6 months out, yeah, you're gonna get a higher premium for that longer one.
Yes, yes, yeah.
Yeah.
You will get a higher premium, Tom, if you have a longer expiration date?
You're gonna high, so your question, what originally was, if you go high, if you go longer and higher, right? Would you get a lower price? Would you get a lower price? Yeah, because the farther away you go from the stock at the time you're setting your call, you're gonna get a reduced amount, right? If you said, hey, I wanna look at what the premium is for $55 2 weeks from now, and I wanna look at the premium for $55 6 months from now, you're gonna get a way higher premium at 6 months if it's the same strike price. Because
Oh,
you're
really?
taking on more risk. You're taking on more risk to have it out that long that the price is gonna break through that.
I thought it's the opposite.
No, no, if you start moving
The
the
strike.
strike price up, yeah, you're gonna reduce your premium. But if you just move it out, if you keep moving it out farther and farther, yeah, you're gonna get a lot higher, price for that.
Let's take a look at that. That's why I want to share the paper trading to share the difference. You could be able to see that, right, Tom? In the paper trading?
You can see it, yeah.
Okay, let me go ahead and stop sharing this so that we could be able to see the paper trading because the scenario is different if you actually compare to hold on. There you go.
Yep. Can you guys see my screen?
Yeah, make it I cannot be. So Tom, can you share the expiration with the same strike price with different expiration? So well, let's see which one is the higher premium.
So this is a paper trade account. I got NVIDIA sitting in here, right? And I say, hey, I want to do a cover call on NVIDIA. So,
Just
obviously you're going to
options.
do, yeah, well, the first thing I look at as I go to the chart, Mary, come on.
Yeah, that's true.
Right? I go bring up the chart. And usually look at daily and 1 year, right? I just start looking at things and what I'm looking for is, what was my buy price, right? First thing you need to know is what's your buy price, right? So my net cost is 102. So obviously I don't want to sell anything that's below 102, right? Because I don't want to have a chance of getting called and taken away. So I'm gonna look at here. I can do daily, weekly, right? Either way is fine. You're starting to figure out where you want to set your price, right? The first thing I look at is the Bollinger Bands. So again, what am I really concerned about? I'm really concerned about where it's gonna, where the top of the Bollinger Bands are. And so the top of the Bollinger Bands right now is, 153. The stock is trading at
107.
101, right? That's a big gap. So there's going to be a lot in there, right? From now to there. Now, when you look back, right? If you just look back 3, 6 months, right? Where was it hitting, right? 154, right? So if you were to get a strike price up here for decent money, man, that's almost guaranteed you're going to keep it. But you're probably not going to get a lot of money for that, right? So that's the first thing I start to look at is where the Bollinger Bands are sitting on the monthly, sorry, the weekly and the daily, right? The daily, it's sitting at 123. So now that gives me a better idea, right? Because there's no way I'm going to get a $50 spread on that. So now the Bollinger Bands on the daily is telling me 123. Okay, great. Now I've got a decent number, right? Here's my 100-day moving average, all right? My 50 days. So I'm kind of getting an idea where the stock can go. And now I know, okay, I want to be somewhere probably between, this is the middle Bollinger Band, right? Which is at 115, sorry, what is that? 108 to 122 is probably going to be my prime area to start looking for options on this.
But it
All
also
right.
depends what's your goal though. If you want to do a
Yeah.
long covered calls, then you have to have a longer expiration strike. But if you want to do like a short one covered calls where you collect your premium, you gotta have to look at the little shorter time frame, Tom, than just the weekly.
So I'm gonna get rid of the put side here so we can just see the call side, right? All right, so we start looking at this. I probably don't want 40 strike prices. That's probably gonna be too far out, right? Maybe look at 20. I want to look at the next 30-day increment. I don't need December. Let's get rid of that. The next 30-day increment, right? The next big one, the next big Thursday, third Friday of the month is the 25th of May. Right now I'm at 102, and I don't know why Paper Trade's not coming up with decent numbers here. Go out of here and come back. We're gonna refresh. That's weird. Let me pick another date. There we go. Okay, so let's do May 9th. It's good. Actually filled out the whole thing here. All right, so what did I say? I'm looking at, 102, sorry, 108 to like 122. My buy price was 102. So already right here, I'm right almost at the money. So if you look at this and you say, Mary, you said what, the first time, 2 weeks, right? So if
Yeah.
you wanted to do a 2 week cover call in NVIDIA, your buy price is 102, and we're looking for a 20% chance that it's not going to get taken away, right? So you want to look at your delta. Right around here is where you want to start looking, fishing for it, right? You see this right here, 21%, 24, 27. Now, I don't know what platform you guys use, but one of the things I love about E-Trade, E-Trade also gives you Powell in the money right here. So you kind of look at that, and they're pretty even, right? 23, 24, 20, 21. So this is where I'm really looking. So where's my price, right? What did I say? 108? Isn't that what I
Mm-hmm.
said? 108?
Yeah, 108.
Beautiful, right? Called it, right? Here it is. That's where you start your 20 set your 20s. When you start pushing up into these 30s, right? 30%, 40%, 40, and that's how I look at these when I'm selling color calls. I don't look at delta, I look at percentage.
Yep.
50%. I don't want Nvidia taken away. I think Nvidia is going to be, 150, 160. Do I want to sell it at 106? No. All right, so then I go, hey, here's what I'm looking for here. So what's my premium, right? I go over here. Let's just say I take the one in the middle, the 24. The other thing I look at too is I look at open interest. If you've got a low open interest, like under 1,000, number one, it may not get filled at your limit price. You may have to do a market one, but there's not a lot of buyers there, right? For that. So that means if you have to try and roll it, you may not get that number again if you have to try and roll it. So you want to try and stay above this 1,000 mark of open interest. You want to look at good volume, right? Because that means there's a lot of interest in those numbers. So I said, hey, look, I'm at 21, 24%. I'm right in the middle, right? So basically a 24% chance that it'll get assigned. I'll go over here, hit the sell, and it's going to tell me how much am I going to collect. $164 on a limit sell, right? So that's a good number. That's $164 for two weeks. I've got and again, E-Trade does a great job here. When I go into snapshot, right? I said, hey, based on delta, I'm at 24%. This tells me basically I'm at 22% chance of getting it taken away, right? A 78% chance of maximum profit. Right? Break even gives me a great thing. Here it tells me this is again what you want to watch out for, right? Here's your expiration. Here's your next earnings. Again, you want to make sure it's before those earning dates because you never know what happens in earnings, right? A company like Nvidia could blow through earnings and this could run right through. Yeah, you made some money, but you missed out on the potential upside of this thing popping to like 120, 125. Now, that's a 2 week. Let's see if this populated that.
A longer
It does want
expiration.
to populate that. You know what? It may not have, the market makers may not have set this date yet properly. Let's look at the 9th. Let's just push it out a week. All right. So we said at 10, what was our number?
108.
108, right? We collected 162 if we did a 2 week cover call. Let's look at a 3 week one. So let's give it a May 2nd. Let's look at May 9th. Let's look at 108 again. You notice our delta has gone up, right? Because we just added another week. Now we're instead of 24, we're at 30, almost 33. Because the chances over that time period that NVIDIA is going to rise have now increased. And then you go look at here, we're looking at the same price, right? E-Trade says, hey, it's a 30% chance, you're going to be assigned. So 70% chance of winning here. Now look at the premium.
Okay, so let's correct that because what I said was wrong then. So the longer the strike price, the higher the premium.
If you don't change the strike price, the longer,
Yeah.
the farther out you go, correct, you're gonna get a higher premium.
So yeah, because I said the opposite.
Yeah,
So
but you also put in, you also said longer time frame, higher strike price.
that's correct.
Yeah. So when you start moving the strike price up, right, then you look, right, then it starts going down.
Yep,
So you were technically correct, but I think, yeah, you meant to say, hey, if the strike price is the same, the longer you go out, the more premium you're gonna get.
that's correct. Yep. Hmm.
So now look, we went from, I think it was 162,
Yep.
164
164. Yeah, it becomes
down to
two.
271.
Mhm.
But here's what changes, right? Yeah, you get more, but now you're down, right? We were at 78% chance of max profit. Now we're down to 71. So you're going down, but you're getting more money,
Mhm.
right? And then let's see if we can get one for the 25th for that number, 108. No, we don't. It doesn't show up yet. But it would be higher, right? Because look at the 110 is already at 270,
Mhm.
right? So this is probably in the threes once they set it.
Mhm. So
Um,
remember those, I'm sorry, Tom, I'm not trying not to cut you off.
no,
Those $2, $4, $1, please multiply that to 100, okay? Because it's those things you always multiply it with 100. That's your value. And another thing, Tom, can you do a basic 101 for how to enter covered calls? The first thing you have to do is you're selling, you're not buying a put. So first thing you gotta click, Tom, show it to them, please.
so we
You
got NVIDIA again, right? We got NVIDIA. I want to do an option on it. Now, let's say you've already done your technical analysis, right? You've looked at your Bollinger Bands, you looked at the historicals, you've even maybe done some charting on it, right? Looking for patterns and saying, hey, where's NVIDIA going to go?
Mhm.
Again, the great thing about it is you already own the stock, right? So you don't have to be on a covered call as accurate on this. It's more of a, I don't want to say ballpark, but you know what I mean, Mary, right? It's, you don't have to be as spot on when you're selling options or buying options with a cover call. All right, let's not do the 25th because they haven't reset it, right? Because we just had the third Friday just expired, so they haven't reset the numbers for the next one.
Let's do 2 weeks.
Yeah, let's do 2 weeks. Again, on something like Nvidia, like look at the volume on this
Hmm.
for 2 weeks out. Go look at Walmart for volume 2 weeks out because you can sell weeklies on Walmart, right? Will be a third of this, right? So again, these Mag 7, these high volatile stocks will have great premiums. Again, I want to find that 24 to 20, no, I'm sorry, 20 to 30 spot. You can be a little more conservative too if you wanted to, and you look, hey, one of the things I look at too is see this volume here and this open interest. These are big buffer numbers. So what does that mean? If I was to pick this one here at 111 for $119, right, to sell this or $1.19 times 100, right? If that starts getting close to my number, I've got this wall right here of people who will sell or move their call if they don't want to get it assigned. There'll be a lot of volume there. That it's almost like a hedge of protection against mine breaking through or being assigned. Right. So that's something you can look at too. If you got a lot right above yours, I normally set mine right below it. Again, you start seeing them at the bigger numbers, right? You start seeing a lot more activity. And I usually go one below that. I don't want to be at these high numbers because there's a chance that when it gets to that close, you may get caught with yours and pulled away. I like to have that little hedge of protection. So again, I look at this one here, the 108, right? I've still got decent up here, got a lot up here, a lot protecting me up here above it. So I go ahead and pick now 108, and look, it's already changed.
Mhm.
Did we pick 108 or 109 last time? We did pick one.
108. We pick 108.
Yeah, now look at it. We
Mhm.
just refreshed and came back. Even in paper trading, it's changing.
Mhm.
So now we go ahead and we select our price. We're going to sell, right? Make sure what you're doing, and I have done this early on. I have hit the wrong one, and I go
Mhm.
ahead and do this, and I go, what did I just do? Right? Because I didn't check what I was doing, and I bought a call instead of selling a cover call. The good thing about your trading platforms, when you're doing this and you already own the stock and you're selling a call, it automatically knows what you're doing, right? Well, at least E-Trade does. I can't attest for everybody, but I know Webull. I've done it on Webull. Webull does the same, and I'm sure most of them do it. It already knows what you're trying to do, so you don't have to do a drop down and go, "Hey, I want to do a cover call." Right? It'll say, "Hey, you've already got these. You're selling a call on stocks you already own." I always do limit. I never pick market. Well, I won't say I would never pick market on a stock that doesn't have a lot of volume. And if you're just trying to squeak out some money, you may want to pick market. But for the most part, it's limit. I got my date, my expiration, right? I got my price. Always validate what you're doing here before you go set anything, right? Selling one contract. Here's my expiration date. Great. Here's my strike price. It's a call. Again, I've been on the other side when I was learning this. Where I've done the opposite. I've either bought or I've done a put instead of a call because I wasn't paying attention. Duration, right? I usually let it sit at default day. And if it doesn't go that day, I may try again the following day. Then you hit preview, and all your trading platforms. I'm sorry, go back one. If your platform has the ability to give you an analysis, I always use it, right? It'll tell you, hey, look, this is telling you where your value of that option goes over time, right? And you want to see it decrease on a cover call, like Mary said, right? You want to see theta go down. You want to see this thing be zeroed out at the end. So then you get your probability, 75% chance win, max profit. I'm going to get out with my 192 and my stock. Max loss. Yeah, you could always have a max loss. What happens on a max loss? The stock goes to zero. What's the chance of that happening? I haven't seen too many of it in my time yet. There are some that are getting close. Your Neos, right? Your Lucids. I used to sell cover calls on them and made money, but man, when the stock is falling, cover calls aren't fun. Probability of profit, 80%. That's a great probability, right? That's what I look for on most of this. I want an 80% chance win, right? That I'm going to get my profit on this. And then again, look for expiration. This is when you're picking your expiration for the call. When in the earnings, right? If it has a dividend, of course, Nvidia does have a small dividend, but it's not enough where it's going to make a difference, right? And you always want to check on that. Make sure you're not really running over your dividend just in case it does drive up too fast. Preview. And then if I'm good with everything here, right? Credit I receive, $191, not 48 cents. Fees, obviously, and then you would hit send. Now, of course, it's a paper trade. We're out of hours, so it's not going to do it, right? It's going to sit there and wait for it. But if we go back here and it does go through, you'd have something that looks like this Apple one that I did the other day during market hours, right? So I've got an Apple call, right? I've got 100 shares of Apple. It's good to May 25th. I got paid $136 to set that. My net cost basis on Apple at the time was 192.77. I set it at 220. So if it goes at 220, that's a $28 bump for me, right? So basically times 100. So what is that? 2,800 bucks, right?
Yes.
And then plus my premium. So basically, I would if Apple goes up to here in this scenario from 192.77 to 220, I collect my premium, I collect the extra move up. That's a $3,000 win for a month. I will take that all the time, right? And that's the beauty of cover calls. All right, questions?
Questions. They said, can you sell your covered calls earlier?
Yeah, you can. So that is a great question. So one of the things I always look to is if you go over here, I track my open market gain. So right now my Apple one is at 1.46, right? I'm gonna let it go. When I start seeing this start getting up to 60, 70%, and I'm getting close to expiration, I'm gonna keep an eye on that because if this stock price starts getting anywhere close to my covered call, sometimes it's not worth the extra 10, $15, right, to win if you're worried about your call being taken away. So if it starts getting to 85, 90%, I'm looking to close that early and just say, you know what? Instead of taking the 194, I'm sorry, the 136 I got here, I'm good with 110. I'll give back 26 bucks to close that out and make sure I don't get that taken away. So you can close your cover call anytime you want. Now, if you're in the green, great. If you're in the red, mind, you're gonna have to pay more back to get it back. And if you're way over this, right, and you're saying, hey, I don't want to lose that, you're going to have to pay to buy that back, right? And they're going to factor in how much more you went over that strike price to set the buyback number.
Yeah, when Tom said buyback, it means you're selling your options earlier than the
No,
expiration,
no,
okay?
no, you're buying it. No, you're buying it. Remember, because you're selling the cover call.
That's
You're
correct.
buying it back.
You're buying it back, it means it
No,
means
it means you're buying it. Yep, you're buying it.
you're
Right.
buying
So
it back.
the only way I could close Apple right now, right? Say I want to close it
You buy it back.
is a buyback. Yep. I'm
Exactly.
selling.
So go ahead,
Yep.
Tom.
Nope. I'm buying back the option, right? I can even sell the shares too if I wanted to, but say I just want to buy back the option. Right now, it's going to cost me what? 143. What did I make originally? 136, right? Because I'm already in profit. So it's going to cost me money to buy it back.
When you say buyback, it means you're closing your options then.
I'm closing the position,
Yep, that's
correct?
what I meant to say. I'm sorry.
Yep.
Excuse me.
Yep.
When you say buyback, you're closing your options earlier than the expiration date. Okay, so don't get confused with that. A lot of people saying, "What is a buyback means?" What I meant to say is you're closing your position earlier than the expiration date. So, we all get paid earlier, like you get paid upfront for the premium when you sell covered calls, but when you try to sell it or when you buy back your options, you gotta have to pay now. Right?
Correct.
Correct me if I'm wrong.
Yep. When you buy it back, even if you're in profit, even if you're 90% or 95%, right? There may be a small price you buy to close that position.
Mhm.
A couple dollars. Again, I'd rather close out early sometimes if that stock price is getting close to my strike price. I don't want to take the chance that, you get that magic hour push on a Friday, right? And that thing pops on you and next thing you know, you just got taken away and you didn't really want to sell it. So I will close out my contracts early. If it's really like in the red, right? That's perfect, right? You don't want these things, right? You want this to be under, right? If this is under your if it the market is trending flat, you'll start seeing this go up, but you'll see your contract will be in the red. You want that in the red. You want this part in the red, right? Because that means that it's losing its not position. It's losing its value, right? Over time. You want this thing to expire at zero.
Yep. So don't get confused with, actually, Tom made a good point about looking at the open interest and the volume. I always take a look at the volume first when I do either covered calls or selling puts, any kind of options, always look at the volume because it will be so difficult for you to sell your options if there is no volume.
Yep. And then you're forced to do market ones, which you could collect money, but if you have to move that contract for whatever reason, right? You don't want to, you don't want to lose it, or maybe you're underwater on the stock itself and you don't want to get called away at below your price. When you don't have a lot of interest in there in volume, it's hard to move those contracts.
Mhm. Yeah.
So
So the Greek for covered calls aren't as significant as the buying options, okay? Because on the buying options, we're always so worried about the theta and the delta and the vega. But when it comes to covered calls, your goal is to never hit, or at least if you're not planning to sell your options, is to never hit the strike price. And because you want to keep the premium that you receive from selling your options. And you also don't care what the delta, either you're gaining or you're losing correct me if I'm wrong, Tom, because the delta is just telling you whether your options is being exercised or not. That's what delta, whether you're green or you're red on the delta, as long as the strike price never hit, you just have to disregard the delta as what it is.
You own the stock, right? So delta, gamma, all that stuff aren't not. I'm not gonna say they're not important, but they're not as important as when you are doing options.
Options, yeah.
Yep.
Mm-hmm. So
Theta is Theta is your best friend,
that's
right?
correct.
Every day that thing stays under your strike price, Theta helps you out and says, "Yep, hey, you're earning, right?" And then that thing closes out and you're good to go.
Yep. So remember, the buying options, your delta is your money making profit, right? The how much value, how much money you're making for every dollar. For delta, it doesn't translate any
Yep.
money of whatsoever. You don't get extra money of whatsoever for delta because you already collected your premium. So I don't want people to get confused when they are doing covered calls and they see that, oh, I'm up on my delta. I think I'm gonna collect that at the end of the expiration. You don't. You already collect your premium.
And again, like stocks like Nvidia, I know everybody's like, when do I pick my, expiration date? I have Nvidia. I trade Nvidia weekly or bi-weekly, and there's a reason, right? You can get this is coming up, so this would be this Friday coming up, 5 days expiration. So if I enter this tomorrow and nothing really changes, right, and I find my 20% down here, 19, 24, right, somewhere around here, I'm gonna get $100, and anywhere between 100 and 130 bucks for the week. Do that 4 times, right? That's between 400 and 450 a month just for one contract per week on something like Nvidia,
Yep.
Google, Apple, right? All these ones that have the weekly ones. And the great thing about that is when you do that, even if this say we get to this, say I pick a 107, so now it's a little closer, but I'm still at 80% win rate, chance of win, right? And and say Nvidia, and of course, all these ones says great news this week, and Nvidia hits 110, right? And it's closing in. I can easily go to the next week and find a 110, 111, right? And start moving it out, still making on $100 and keep moving it out. So that's a good thing about weekly cover calls with these ones.
Yeah, but please, those people who wants to start with your stocks dot doesn't cost you a lot of money. Like start with TSLL or SoFi, things like that. Start with a
Yeah,
local
look at
number.
SoFi. That's a
Yeah,
great one, Mary, because
look at
SoFi
SoFi.
has weeklies too.
Or TSLL too. Actually, it's a lot of
Yep.
people are trading TSLL in the
Yep.
Asian cafe. So if you have more than 100 shares of, are we looking at SoFi?
With SoFi, yep.
Okay, so for SoFi, go ahead, Tom. Let's do let's say 2 weeks. How much can we collect for a premium of 2 weeks?
Do
While
two
you're
weeks.
looking at that, I'm gonna go ahead and take a look at the technicals. SoFi.
So so let's just say you bought at around $11, right?
Okay. Okay.
We'll just pull that out. And now you want to do a contract 2 weeks from now. You want to stay that delta again, right? We want to stay under 30, so anywhere between 20 to 30. You got one right here, right in the middle, 25, right? Great one. You go ahead and pick that, right? You're gonna say, hey, I want to look at that for 33 cents per contract. Again, right? Do you want me to show the chart on Mary, or are you gonna do that?
I'm looking at the chart, but how much is your strike price, Tom, that you're saying?
The strike price would be at 12.50.
1250. Okay.
Yep.
First resistance is about 1182. The next one is 1360. $13. Okay. So if you bought at $11 and your strike price is 1250, what is the delta for that?
The delta on that is 25.
25. Okay. It- maybe your strike price may be a little bit. Okay, it's fine. It's fine because it's only 2 weeks expiration, right?
2 weeks, yep.
Okay, yeah, then that will be fine. But please know there is a higher chance that you may get that exercise because it's only 1250 and your resistance is from 1165 to 1360.
See what Bollinger Bands tell you. So you said what, 11.65?
Yeah, your resistance is
Oh,
1165 to 1360.
yeah, which is almost the middle of the Bollinger Bands, right? On a daily.
Mhm.
Yep. And then you said to what?
To 1360, I think I said.
Look at that. The top of the Bollinger Bands is 1377. Look
Okay.
at look at your charting, Mary.
I don't know that. I didn't see that. Yeah.
No,
So,
you're right there. You're right. So, and again, right, with cover calls, you don't have to be as accurate. That's why I love the middle to the top of the Bollinger Bands for my cover calls.
yeah,
Yep. Because I mean, you're right there, right? A couple of, I think we're a few pennies off.
yeah.
Yep.
So that's a good way to do a covered calls. Start with SoFi, TSLL. Tom, take a look at TSLL and I'll take a look at the resistance. So let's say everybody has, let's say 100 shares of TSLL and we would like to do covered calls.
What do we buy at?
How much is TSLL now?
It's 767.
Seven? Okay.
767. So
Take a look
seven.
at 2 weeks, 2 weeks.
Yep.
Okay.
All right. So our
And
delta right in the middle of our sweet spot is at 24, which it
okay.
gives us a $9.50 strike price.
Okay, I got $10 all the way to 1206 is your resistance. So 984, $10 to 1146 is your resistance for that. And honestly, I believe it could actually hit that $9.50, Tom. So maybe put it a little bit higher.
So here's the other thing too, right? Look at this number. Look at the IV on something like TSLL,
Let me
right?
see.
Again, these are
148.
things you have to be aware of, right? When you're
Yep.
selling these, right? What is the stock you're selling? Don't blindly sell
Mhm.
cover calls, right? These high IV ones, right? Even though this is telling you, hey, right now I think it's about a 76% chance you're gonna get your money and get out. The IV on this, and we've seen it all the time, right? A lot of us play TSL on a daily basis, right? Swinging it. This moves quickly,
Yep.
right? Because it's based on Tesla.
Mhm. So that's
So
why I
yeah,
said that 950 may trigger
yeah,
because it could definitely hit that 950 and touches that $11. So I think with that, Tesla is very volatile stocks.
again, let's look at the just the Bollinger Bands, right?
So 11, it
Middle
could
is what did you say, Mary?
we got hold on. We got 956 to 1002 and then hit 1078 to 1146. So if I will get to buy if I'm selling covered calls for TSLL, my strike price will be at least 1250 because there's a higher chance that we could actually hit those numbers that I give and 1206 being the top.
So Bollinger Bands tells you 925 to 1210,
Yeah.
right? And it's
1206.
tight. It is tight right here.
Yeah.
Right, there's not a lot of room, right? So like Mary said, if this breaks, it's gonna go.
Yeah. So that's why I said 1250 may be your strike price because 1206 is my resistance. Bollinger Band said
Um,
1210. So
I hit the wrong button here. So what is the strike price at 1250?
what is
5 cents. So this is where you make a decision, right? Is it worth risking a stock that I want to keep? If you're just swinging it, then you may say, okay, yeah, I'll do it for 5, 10 cents, right? Depending how many shares you got. But is it worth it for $5?
which is 50 bucks.
Yep. No,
Right?
this is
No,
$5.
$5. This 5 cents. I'm sorry.
Yeah,
I
this is five
apologize. Yep.
cents. This is
Yep.
$5. Is it
Yep.
worth it?
No.
Right? And then look at the open interest, the volume. Probably not. Right. So sometimes you look at your covered calls and you're going, it's not worth me, doing that. Now again, if you're swing trading TSL and you want to let it go, then you would go back up here and you say, hey, I'd willing to let it go, right? I bought it at 8. I'm gonna let it go at 10.50 and make another 17 bucks per contract. You may want to do that.
Yep.
All depends on what your goal is, right?
Yep. Depends what is your goal.
This brings up somebody had a question about what's the average IV on the chat I'm looking at, right? Praveen. So there is no average IV. because you got stocks like this, right? Implied volatility is insane. And then let's just say another one I like to own is Walmart, right? Look at Walmart's implied volatility, right?
Very little.
Slow and steady Walmart, right? But again, a great one to own. Mary, what's the chart on Walmart tell you 2 weeks from now?
Um, the reason why we're telling you guys the strike price and the Bollinger Bands, because the goal for picking the right strike price is right a little over above the resistance. So just like we said, the resistance for CSLL, the highest is 1206 and Bollinger Band said 1210. So we're picking like a little over that. So that's why we picked 1250.
And there was no money there.
Yeah, exactly. There's really no money too. So
Because of the IV. When you find like when you start looking at the IVs, right, they start really going high. As you start moving out, man, you're gonna start losing a lot of premium, right? Because then they're not gonna sell you, they're not gonna sell you, a lot of money on stuff that's, way out there because the volatility is so high in the stock. But like, again, looking at Walmart, I could do a contract right now, right? 22%
my,
in the
my,
money.
my computer is freezing. I'm sorry.
Yeah, no worries. We can look at I'll show my chart here. So, right, Bollinger Bands on Walmart.
Hold on. Okay, we got $99 all the way to 103.91.
Yep. So you could pick something right outside this top of the Bollinger Bands, right? $95. What does 95 get you?
You got 96.03 as
I'm
a
sorry, what do I
resistance.
have? Bollinger Band said 96. Okay. So 96 is right at the top of your delta, right? That we're looking for. 30%. Now, Walmart, I don't want to let go, right? Because it's a great stock. It pays good dividends. You can run cover calls on it, every week if you wanted to. So I want to come down a little bit. I want to hold on to it, right? So Mary, you said what, 99?
Yes.
So I might want to push it down into the teens, right? Look at 15.
You got 99 to 103.91. You got
Yep.
local resistance on the 96.03.
Yep. So if you look at something like here's a lot of volume right here at 100. Oh, I'm sorry, open interest. So that might be your sweet spot right there. Right now you've got a delta of 0.07. So what if I click that and I say, hey, what's my analysis? 86% that I'm going to keep my $20, right? My profit on my premium and keep my stock. That's a pretty good number.
Mm-hmm.
Again, it's Walmart, so you're not going to get the huge numbers, right? You get with TSLL, or Nvidia, or any of the new quantum hot plays, right? I do IONQ, and it's crazy how much they pay on that. But again, the volatility is insane too. Any other questions?
Any more questions? Yep. So remember, the main goal for covered calls is just to hold your shares and generally aim for stock price to stay below your strike price because you want to keep your shares and collect premium. That's the only goal for covered calls, especially if you would like to keep your shares.
Yeah, and again, what I would say, what I said earlier too, is don't fall in love with the stock. If you set a price, be comfortable. It's just like when you buy you do your options, right? You've got to be comfortable with the fact that it may get taken away from you. So, set a price that you're comfortable with, right? Making money and saying, okay, now, and be happy. Hey, I made, my premium plus the difference in the thing. So like Mary said, on the Tesla example, I made $700. Great. How can I redeploy that money now?
Yeah. So, question. So sometimes like you're in a deep loss. Let's say it's Tesla, and you were, let's say, 40% loss because you
Hmm.
bought high, so it came down. Would that be recommended to be a covered call? Because then you may get assigned and you may sell your shares at loss.
Yeah, so that is the danger, right? When you're at that, and I'll be honest, so I have a couple of stocks like that, and so the danger with a Tesla, right? You do a covered call, and I'm managing a couple of a covered call on Tesla right now because although I'm in profit, right? I have to keep maneuvering it. Why? Because Tesla moves all the time. So when you're 40% down, let's just bring up Tesla. It is a game that you have to be very careful with, right? So I wouldn't do a 30-day if I'm down 40%, but I still want to try and squeeze some money out of it, and maybe even dollar cost down, right? Who's that? Jean-Pierre?
Yeah.
Maybe dollar cost down, right? Hey, take advantage of it. And this is another thing I do when my cover calls, if that's a stock I believe in, go back and buy more stock of that particular one I'm selling cover call on. So say you want to get your DCA down on Tesla slowly. Let's just say, and I don't know what you bought it, you don't have to tell me, but let's just say you're underwater, right? So Tesla's now at 240, and you bought it, say, let's just say 260, right? Just for example. So you're down, right? Um, you can look at the price you're at and say, hey, where can I go from that, right? Where can I get close enough to my um my
Break
my
even.
my buy price, right? Let's span this out just a little bit, 40 strike prices. Right. So you can say, maybe you're 290, right? And you're going, your DCA. So you're way underwater, right? Because the strike price is down here. Well, you obviously don't want to set a strike price anywhere near, right, what it's selling for right now. Again, even if you just start looking at it, Jean Pierre, and go, hey, like Tom said, what's my 20% mark here? Right? Now you're 270. So that gives you what? A $29 um breathing room, basically, right? Between what it's currently selling for, what your strike price is. So that gets you pretty close, and it's only 2 weeks.
Mhm.
Now, could Tesla do that? Yeah.
Mhm.
But again, great thing about Tesla, if it starts getting closer to 270 and you're the man, I can't let that go here, right? Look at it a week out after when you're getting close to that expiration date, right? Hey, can I move it out? Can I move it up a little higher? 270, what's 275? Oh, I can buy mine back and then sell it another cover call, right? I buy the one I originally have, turn around and sell a new one at a higher strike price, move it out a week, another week, a week, and then move it up also at the same time and still collect another little bit of premium and start following the stock up so I don't get called away, right? And so you can climb it. You can chase it back up. I'm actually doing that with NVIDIA right now. I'm a little under an NVIDIA right now for obvious reasons, right? And so I'm manipulating NVIDIA week to week to get it back. So, my strike price will hopefully get back to where I bought it for. Does that make sense?
Yeah, Tom, specify to them when you buy back, you have to close your original.
Yeah, so I'll show you on the Apple one. That's why I set that up,
Yes,
right?
because a lot of people don't understand that
Yep.
terminology. When
Yep.
you buy back, that you have to close your original covered calls and then extend your expiration.
Correct. So what you want to do is you want to go ahead and say, hey, you know what? I need to adjust this, right? And I need to, let's say, roll out, right? I want to create an order. Okay, so this one creates it for me. It automatically goes to the next strike price, right? You're gonna pick your own, right? Let's say, I don't want to, obviously I don't, right now Apple is at, it's approaching my strike price. I don't want to lose it. I want to adjust this. Let's say I want to go to the following May 2nd and move it up just a little bit. So I have to buy it back. This is the original one, right? At 220. I'm buying it back at $1.40. I'm now selling one a week out at 225 for 38 cents. So I'm going to have to spend $103 to get there,
Mhm.
right? So then you're going, well, is it worth $103? Do I want to just, let the stock go and collect my premium? Again, depends on where you're at with your dollar cost average. Or you can start just looking at what would it cost you to move it out a little farther. Let's say the 9th. Now I'm only spending 77, right? And again, the higher strike price you go and the farther out you're gonna go, it's gonna change that, right? Now you're spending 101. So you gotta always be careful of that.
Yeah, you're paying the difference.
Yep. As soon as you start to buy back, you know you're gonna be paying,
Yeah.
right? Unless you go way out, right? Now you receive $937. But do you want to take the chance that Apple's going to be at 230 there? Now, if it's above your dollar cost average and you're good with that, collecting $1,000 and letting it sit, that's fine. But then again, that's 9 months, 8 months of it, you not being able to do anything with this stock, and there's gonna be a lot of movement in that stock in 8 months, right? So you tied up that whole amount. You tied up the stock and the option for a whole 8 months. So that may not be, again, worth something you want to do.
And for the Tesla, Tesla can move $40 to $50 in 1 week. Okay, so if you're doing covered calls, just be aware how much Tesla can move in a week and base it upon that. Because if your strike price is too close to that $40, $50, you will be assigned and
Yeah.
you will be required to sell your option, your shares.
And when you're underwater, again, and you're selling covered calls, you may have to, massage it a bit until it comes back to, where you're comfortable selling closer to your dollar cost average. Yeah,
Yes.
it may take some massaging. Yep.
Meaning what Tom was saying is, from my understanding is you will not sell your stocks at a loss if you're doing covered calls. You would like to sell if we ever get assigned, you would like to sell it for a profit, not for a loss. So if
Yep.
you are down 40% shares of Tesla, you just have to really be careful when you're doing covered calls because it could trigger. And now you're losing your shares of Tesla.
And I was too, right? Remember when Tesla dropped to like $100,
Yeah.
like 1-1,
At some
and
point.
my cost was way up. My cost was in the 170s. It still is, thank God. But I was selling cover calls at like 125, 130, and I just massaged it all the way back up until Tesla went on its run. I was like, okay, great, I'm out of the hole, right? So stocks like that, like, again, those high volatility stocks can move quickly, and you've got to be prepared to adjust your trades.
We're gonna go over again selling, Tom discussed covered calls, cash secured puts. Cash secured puts is when you're selling options too, but you're waiting for that strike price to trigger because you would like to hold the shares. So you would like to buy the shares. I'm sorry, not hold, buy the shares. So, when Tom is available again in a couple of weeks, we could go ahead and review the selling puts. Right?
We'll do the secure puts next. Yep.
Yep. So this is when you're waiting for the strike price to trigger because you would like to acquire that shares. And that's also another way of having passive income. This is when you don't have the shares, but you have the capital or the margin to buy the 100 shares of whatever stocks you would like to buy. But at the same time, you're also collecting premium while waiting for that strike price to trigger.
Yeah. I call these the low maintenance trades, right? The way to make money where, if you had to take a week off from trading, right, would your overall, income revenue stream be affected? And so you've got to have these slow moving ones that also create revenue on the side, right? You can't always just be trying to scalp and day trade constantly because, things come up. And if you're away for a week or two, how does it affect your income? So you got to have other revenues coming in.
So a couple of weeks when Tom allows us to take his time away from him again, from his family, then we'll go ahead and do a review for secured cash secured puts, sorry. It's like the same thing in covered calls, but this one you don't own the shares. Covered calls, you own the shares and you collect payments. The other one is we're waiting for the strike price or we're waiting for the stocks to go down so we could buy it. That's also another way to make money. Right, Tom?
Yes, ma'am. Yep.
So, any more questions? Because I'm trying to cut it short because I know it's Easter. I just take advantage of this day because Tom is available.
Yeah,
But
sorry, I wanted to make sure I understood Tom correctly. In terms of massaging it, like you said, if you were really in a deep loss, like 40%, like you did with Tesla, from like 100, it went like 120 and 125 or 130,
Yeah.
something like that. So what expiration date do you give yourself? A week, 2 weeks?
Yeah, I was doing probably week to week on that.
yep,
Yep. Because
I suggest weekly too.
if you set it a month out, right, Tesla can jump $100 in a month,
Yep.
right?
Okay.
Mm-hmm.
So
Be-
week to week gives you a little more flexibility on that type of play.
You have more control of your options on that.
Yeah.
But I agree with Tom. If you're 50% or 40% down, week to week expiration will be better. You could manage it better. And in case you have to buy back, it's at least, the
But in
cost will be a little bit minimal than.
yeah, in that case, how do you determine how far to go though? Like, do you still use the Bollinger Band, or
All right, let's take a look at Tesla. Go ahead, Tom, take a look at the covered calls for Tesla.
meaning you for your strike price? Because you don't want to set it too low to strike or too far. If it's too far, you're not gonna get in premium or very little.
I love hearing what Mary comes up with and see what the Bollinger Bands do, right?
So Tom, take a look at 1 week options for covered calls because I know he's down 40%, right? So let's do 1 week. I know Tesla moved
Week.
$40, $50 in a week, and I don't want to do a strike price that's over $50, $40. Let me just see. Tesla could move up to 274. I don't want to put a 275 strike price for that. Tesla could also move all the way to 285 in a week. The next one is 291 is your strike price all the way to 309. So if I have your shares, I will have to put it at least 310 as my strike price for next week.
So if you see this right here, right? See my screen, this is just next week. 300, I'm all the way down to 290. I've got to expand this all the way to all, right? And watch what a delta is on a 300. And this again, right? The deltas and stuff are a guideline, but you got to know where your stock is going to go, right? You've got to understand, and that's what Mary's charting is so important. Your delta is like 0.01, right? So 99% chance. Would you do that for, basically it's probably come out to about $50, so $48, right?
Mhm.
That's not too bad if you've got your charting right? That means Tesla has to go $49, right? And if that's and like in jump here, I don't know just strike prices, but if that's above your strike price or pretty close to it, that's not a bad play, right? You collect the premium, you watch it. If Tesla on Thursday is either close to breaking through, right, or at your strike price, and you say, hey, I'm still a little underwater, I need to move it. Then that's when you look at the next week. Can I go up to 305? Can I go up to 307.50? Now that's what I mean by massaging it, right?
Okay, yeah, you just keep how do you call it? Like when you change a date to the future date, you basically keep changing the expiration date.
Yeah,
Yes.
you want to, yeah, if you want to change, you don't want it to get taken away at that price, right? You got to move the expiration date and you want
And
to
it's
move
right.
your strike price. Yep.
Mhm.
Yep, and that's how I went from being way underwater, right? What's 170 down to 101? That's probably 40%, right? I was way down there, and I just kept moving it, and collecting premiums until they got all the way back, and I made money off it. So it can be done, especially with a stock like Tesla.
Yes, Nick, technically you don't lose money on covered calls because one, you are selling your strike price above your whatever price you bought it. You will never buy it break even, right? You will not sell it break even, I'm sorry. And two, yes, you're collecting premium. So you technically don't lose money. It's just the only thing is the profit. If your strike price is triggered, and you gain like $5 and it went up all the way to $50, you lose that opportunity of getting that excess amount of profit. You're just limited to that $5 profit. So it's really a win-win. It just depends how much profit you want.
It
for
can cap your
Tesla.
earnings. Yep.
And how much deep you are in the loss? Because if you are not in loss, then yes, any kind of gain would be okay. But if you sold your shares at a loss, then you're losing. You're still losing.
Well, in your case, John, I would definitely not suggest to do a covered calls if you're deep on the money for that, but not unless you're doing a very short expiration date and then extend your expiration as the time goes by. But for those people who's doing covered calls, I will never sell my covered calls below my price, my buy-in order. You know?
Yeah. Because you're just giving money back, right?
Exactly. So Nick, you are right. I will never get greedy. You will win regardless. Win is a win. But this is the best way to make money, and very minimal risk, I might say. Very minimal.
Mary, I think you talk about it a lot, right? Take the wins, right? Don't and I know Antoine says it about don't look back, right? You
Yeah.
take the wins. If you get a cover call, it gets taken away, you got premium, especially if you've been doing it a while, right?
Yep.
Say you've been doing it for a year and you were collecting premium every month, right? You know, a couple $100 every month, you made $1,000 in premium over a year, and the stock gets taken away and you made another 1,000. Hey, it's money. You made $2,000.
It's
Don't
less risky.
small wins.
Yeah. It's less risky and you don't have to deal with your emotion.
Yeah.
Yeah. Less riskier than buying options, basically. We'll talk about selling puts too. The one that Tom had discussed 2 weeks ago. That's similar. So that will be also interesting. So while you're waiting, you're also collecting premium. Another way to collect money.
Yep. So Navina pointed out the only real bad thing that can happen on a cover call, right? If your stock is in a downward trend, right? You can't, you know, number one, if you're locked into a cover call and that stock is in a downward trend, yeah, you're losing money. You got your premium, you know. So you look at this way. The premium helps offset it, and it, you know, and if you're doing your charting and stuff, and you're going, hey, I don't see the stock, you know, bottoming out here. Again, you take that premium and you say, hey, I'm going to start setting aside this premium because I'm charting this and I can see this stock is going to turn around, you know, at this level, and you set that money aside and you don't use it, and when that stock starts to rebound, you start dollar cost averaging on its way back up, right? And reduce your cost and then still collect premiums. That's one way you can do it.
Mm-hmm. Yeah, that's what we're talking about, Nick. Why would you sell a good stock? Like Tom said, I will never sell my Tesla, he said. So what he does is if he knows he's gonna get triggered, he buy back. He has to close that and extend his expiration.
And look at it this way, right? Everybody looks at, I don't want to lose money on this trade. What is the goal? The goal is to make money. You're not going to win every trade, right? You've got to be willing to adjust trades. And then if you guys do anything like I do, I do a monthly accounting, right? I look at all my trades and where I was. And if I'm up, I'm good. I don't worry about the trades that could have or should have, right? If I'm up, I'm great. And I go back and say, hey, where could I have done better?
Yeah, exactly. So I think we're pretty straightforward with covered calls. Any more questions on covered calls? Thank you, Tom.
Somebody asked, Miss Mary, somebody asking for about the Bollinger Band. What are you looking at?
Tom, go ahead and show your Bollinger
Yep.
Bands, please.
Yep. So the Bollinger Bands, right? We'll wind this out a bit.
So first of all, I'm sorry, Nick. I mean, Tom, just give me 1 second first. How the Bollinger Bands is the candles usually stays within these bands. So, what Tom is doing is he buys his covered calls. It sounds like per his technique.
I'm looking for up here, right?
Go ahead,
Right.
Tom.
No. So basically, when I look at the Bollinger Bands, I want, right, you got your middle, so that's where you can start looking, but I want to be up here. I want to be up at the top of the Bollinger Bands, right? Because what happens with the Bollinger Bands, right? Stocks tend to ride in between the Bollinger Bands, right? So if it's down here now, right, it's way down here at 242, the chances of getting all the way back to 487, especially if I'm doing a week or a 2 week one, right? I mean, it's Tesla, but my odds are pretty good it's going to be up here. So I want to look at something that's going to be in the 480s to 490s at least, right? So if I want to stay out of that. And then that's a weekly, but then when I come down to a daily, now it's down to 289, right? Again, I still want to look at something at the top of the Bollinger Bands moving up, right? Do my charting. I know I got a bunch of lines in here. And then do my charting, right? And then say, hey, this is where I think the stock is going to be. And again, what a tool like the one that E-Trade has, again, it gives me all the probabilities, right? I got all my deltas, my thetas, right? Just to give me a view, right? Of, hey, 24%, to be in the money. Sorry, out of the money. 24% to be in the money. All right. And then my potential to be, win my trade and not get my stock taken away from me is great. But again, Bollinger Bands are a great place to start. It's not hey, this is the only thing, right? Right, what Josh always teaches, and I know Ertuan teaches and Mary, it's not one indicator, right? You don't go off of one indicator. You've got to use this as a starting point. I like to use it as a starting point for me, the Bollinger Bands.
Ertuan use a lot of Bollinger Bands too. So what happened with the Bollinger Bands is normally it serves as like a support and resistance. It's not normally, it's always. So the candles just trade within the bands. So when it's on the bottom, when it's in the bottom, the probability of that is to go up and then maybe trade and then break the middle part of the Bollinger Band. It means it's bullish. Once it's in the above this middle line, it's now bullish, and then it's gonna hit the top. And then when it hits the top of the Bollinger Bands, and guess what? That thing must come down. That's what its purpose. Like, this is the support of the Bollinger Bands. Candles will be vacillating around that. The bullish signal is when the Bollinger Bands, when the candles break above that middle band right here. That is a signal that this will continue to move above. But if
Yeah.
the candles just remain below the Bollinger Bands, this middle part, you are in the bearish territory.
Because there's a big difference between, say, if you're here right in the middle, right? What is that? Let's just say I think it was 338, somewhere on there, right? And then you say, if the stock price is there right now, the chances of getting it to I'm sorry, let's do a daily, not a weekly, right? If you're in the middle here and you're at 255, right? Say the stock is trading at 255, 260, somewhere range, your chance of getting to 290 in a week on Tesla, it could happen easily, right? It could happen in one day, right? So you may not want to be looking at the top of this. You may want to be looking higher, right? Because it's already broken the halfway point. Now, if it's sitting down here at 216, man, 290 looks pretty good there, right? In a week or 2 week trade.
Yep.
So there's a big difference. So it's a great place to start, right? When I look at the middle, if it's at that middle, I'm going to be looking way higher than what it is. I'm sorry. Is that rain drowning me out? It is thundering over here. But it's a great place to start to look at where you want to set your strike prices.
But I suggest, like, if you're going to use the Bollinger Bands as a strike price, just buy it above, like have a strike price above the Bollinger Bands, okay?
Yep.
Because you don't want it to get triggered.
Yep. And again, it depends on the stock too, right? We saw, right? Some stocks, when you get to the top of the Bollinger Bands, there ain't a lot there, right?
Yeah.
But then again, it's because that stock is not really a fast mover, right?
Mhm.
So you may be a little more safer buying in the lower range. But with these high volatility stocks, again, your Teslas, your Nvidias, your Apples, your Googles, all those guys, man, you do not want to be caught in here if you don't, especially if you're underwater or if you don't want to sell. You want to be higher, like Mary said.
Mhm. And Navina made a point, also make sure you have settled cash to buy back your covered calls. That's a good one, because if your options is assigned, it means you have to sell your shares and you want to buy your shares again. you have to make sure that you have extra cash to buy that back, to buy your shares back, because if you're only depending on the money that you just sold, you will not be able to buy that back right away. You have to wait until, depending on your broker, 24 to 48 hours.
Then she's great advice for any of your accounts, right? Don't leverage all your cash. Leave money there so you can maneuver I mean, if you're just a plain old trader and you just want everything to be, you're not going to touch anything, that's fine. But if you're doing any kind of option trading or even swing trading, you need to have cash available. Don't leverage every last dime saying, I'm trying to squeeze everything I can out on this week's trade. Because, man, if you got to try and buy stuff back or adjust stuff, you don't have the money and you're underwater, you're going to lose that stock and you're going to take a loss.
Yeah, it's true. Even Navina said, Miss Mary, even if to buy back your covered call, you need to have money in the account. I agree. You really
Man,
have to have money.
my early days, I've been there. I'm like, man, I need to buy this back. I got no money.
Yep, you
I guess I'm
cannot.
doing a transfer.
Yep, yep, that's the only way. You're right, Navina. You have to have money if you really want to buy back your shares, you know. And even if you buy back your covered calls too, you're right. So when you buy back your covered calls, it means you have to close the options. You still have to have money in there. If you have no money, then you cannot.
Yep. And I know everybody's at different levels, but one rule I go on is I need to have at least 10 to 15% of my portfolio as cash, right? To be able to do things. Otherwise, man, if you start squeezing it gets a little scary if you got to start moving stuff and you don't have the money to do it.
Yes, Navina, of course, it will be more expensive to buy back because you are closing that options and then you are paying more, because your purpose for that is to increase your expiration date to a longer one so that your strike price will not trigger.
See, Navina and I are in the same situation. We learn more by our mistakes, right, Navina?
Yeah. Yeah, she said that when she has to buy back, she didn't have no funds, so she has to wait the next day, a couple days to settle her money.
Yeah.
Yeah, it happens.
Oh, Mary, somebody's got a question for you.
Okay, what is it? 487?
47.
487.
You want to take back the screen?
Sure. Well, that is the top. First of all, what's going on with the market right now? Hold on,
Wait, I didn't stop sharing here. Oh, did you already take it?
I got it.
Okay.
So 487 is the top. It's right here. Okay, right here maybe. Okay, right here. I'm sorry. 488.54 is the top resistance of Tesla. Is it possible? Well, right now with the market sentiment on the tariff, it's a little bit impossible to hit this level right now. If China settled and say, hey, I'm willing to negotiate with the tariff, then there's a higher chance to start getting first to 291. I don't go up right away until I break the resistance from the bottom. We have to start above here first before we actually start moving above. Like start from 291 to $300 resistance, break above that. Actually, you're right here, 275. Break above that, then that's when we see the movement of Tesla. Right now, I cannot say, are we gonna hit the 487 again right here? I'm not sure. It just all depends on the tariff problem.
Well,
We're just
we have
really,
earning coming up, Ms. Mary.
ooh,
Yeah.
who's earning?
We have earning coming up on
Second,
Tuesday, so
22nd.
it could tank or pop.
Okay.
Depend on how good is there. I think the earning number going to be down because the number of car being produced is being less than uh, expected. But if
Yeah.
Elon could tap dancing and give a good what do you call the forecast about the
Guidance, forward
Optimus
guidance.
and forward guidance, and then Tesla can jump, but otherwise, it will tank because of the earning.
Yeah. Well, we missed earnings last time. So we actually have a, let me just take a look at Tesla. We have mixed bearish signal for Tesla. One of them, we have this ascending wedge, which is bearish in the monthly. And not only that, we are still on the bear territory in the RSI, slightly bearish on the monthly. MACD is curling down, okay. But your weekly, bear territory, both of them. This one just curled down. Next one is the signal of the MACD to be 0. Not yet, but we are in the bear territory in both RSI and MACD. We have lots of bear signals for Tesla. It's not confirmed. It's just a bunch of signals that hasn't been confirmed. Ascending wedge below 50. I mean, the monthly, we are respected the 250 moving average for Tesla. And we have a head and shoulder on Tesla. Not confirmed. Neck is this side, about 215, 217, all the way to 212 is the neckline for the head and shoulder. Nothing is broken to the upside nor to the downside. Same thing with the ascending wedge. Nothing is broken. It was still consolidating within the wedge. So earnings will definitely give us the path either to the downside or we'll hit up and retest the top. So we're just right there. We have a, what do you call it? Bearish. So
Right now we're -$4 in overnight market.
so we have 238,
237, yeah.
37, sorry. So 237, okay, so our first local resistance will be 233.89 all the way to 236. So that's your local resistance, local support. The next one will be heading here, 228 all the way to 219, 220. But your key level of support lies between 214, 217, all the way to 212. That is your key level of support for Tesla. We did not have a lot of selling pressure last week, though. It did not give us a lot of selling pressure for a couple of days. We just stagnant below our 200 MA for the volume. So it's not a lot of selling pressure yet. It's not giving us any hints that we're selling. So let's see how it goes tomorrow. Yeah. So let's see. So respect this candle, use this candle. This will be your support and resistance right here. That's your, because we are trading inside this candle. So this big candle on April the 9th will serve as your support and resistance, okay? But if we beat earnings for Tesla, then you're going to see that 274, 275, 289, all the way to 291. So that's a resistance if we beat earnings for Tesla right here.
Miss Mary, can you show one more time like how to put the Bollinger Band? Like, they are different when I look into which one is we use it.
Sure. There's a lot of people use Bollinger Bands. Okay. Tom, what do you use, Tom?
You mean,
What kind of Bollinger Bands do you use?
I just used the basic with the, what is it? Hold on, let me look at my trading view. The top, the middle, the bottom. What do they call those?
This is the Bollinger Bands for me. Let me just take off my SMA. Okay.
Yeah, I just use, what is that?
The
Upper,
default.
lower. Yeah.
Yeah, when it comes to bands, I normally just use also the middle and the the three lower and the upper band.
Those are the ones I use. Yep, same ones. Yep.
Okay, let's go ahead and use this as the green. Let's go ahead and use this as white. Go ahead and use this as red. Okay, so with the Bollinger Bands, every time the candles move above or hit the resistance of the upper bands, it normally bounce back and hit. So this serves as a resistance, your dynamic resistance. It could continue to respect the Bollinger Bands in here. However, when you see it start moving, you have this Bollinger Band signal right here, the middle part. So this tells you the territory, whether you're above the bull territory or the bear territory. So the bear territory is when we trade below the bands right here. What do you call that bands here? Hold on. Yep, the Bollinger Bands moving average, which is your actual Bollinger Bands, is right here. So everything that falls below the bands, the middle Bollinger Bands moving average, is bearish. When you break above the moving average of the Bollinger Bands, it means it's bullish, because the possibility of hitting above this is testing above the upper band. The possibility of you trading below the bands is touching the lower band, because that will be the support.
So you choose the Bollinger Band parabolic, something like that? And what the number you put inside, like 510 SMA or something?
This is default.
Oh,
That is the default for Bollinger Bands. I don't change it. Usually when it's default, you don't really want, this one is 21 MA, simple moving average 21. You could change it if you want to, but if it's default, I normally just leave it there. What about you, Tom? Airtwine actually use a lot of Bollinger Bands.
I use Weeble, so I just use whatever the default setting is.
Yeah,
So I don't
nothing
change
fancy.
it.
Yep. When it comes to default, like the VWAP, MACD, RSI, those things, you just use default, nothing special.
okay, thank you.
So that's
The only thing I change usually is colors and bandwidth. I don't really change a lot on the default stuff.
Yep.
So a follow-up question, Miss Mary, on the Bollinger Band. So whenever you see that the price is near the lower band, does it mean that it will kind of try to go up to meet the upper band? So is that like an
Yes.
indicator for us to see in combination with other EMAs and all for us to
course.
see? Yeah, okay.
Yeah. The only thing with the Bollinger Bands is you could actually continue to trade within the lower bands, like the candles will continue to fall, but it just hardly comes out of the bands. And if it does, it normally goes above right away.
Right.
Take a look at this. See. Oh, wait, what happened?
Right.
Do you see no candles falls outside the bands?
So in this example, looking at it, it is on the lower side, like below the average, but closer to the lower band. So considering this, is it a good thing to think, hey, it will go up, maybe like in a couple of weeks from now?
It's an extra indicator. Yes.
It's an indicator.
Yeah,
Okay.
it's an indicator, just like any indicator that you have. It's a strategy. People use it because they like to see how far out, or is there's more chances that the candles will fall outside that, or am I really bottoming him out if this is really the bottom? The problem with the Bollinger Bands is, without you looking at your support, is it will continue to fall down and respect the Bollinger Bands. So that's why it's not just to rely on one indicator. So that's why I want you to take a look at your support and resistance.
Okay.
So
So you said
yeah. And also that if for the price to go up, you have to look at the where are you in the RSI? Are you oversold?
Yeah.
So if you're oversold and you're at the bottom of the band, then your chance of going up is pretty good. But if you're not oversold yet, then it just continue to drift down. So
Yeah.
you have to use that, and you have to use MACD. You know, if you use three of them together, I think you have a good clue of what's going on.
Right.
That's
So
right.
8 to 1, Miss Mary said you use the Bollinger Band, right, for your swing trades or scalp trades. So what frequency or what time frame would you use?
What frequency?
No, I mean
Like
the time frame. Like, do you use like a
Oh, time
daily
frame.
time
Yeah.
frame?
time
Yes.
frame. Yep.
You know, I mainly make my decision on the 2 minutes and 1 minute. The reason for that is I want to see fast action. But that is not, that's all depend on, like Miss Mary said before, it depend on who you are. You know, a lot of
Right.
people cannot handle that much stress
Mhm.
for seeing it moving. So they use the 5 minute and 15 minute for decision to slow it down. But for me, when because I can be in and out of a trade maybe within 5 minutes. So that 5 minute candle may not be sufficient for me. So what I'm doing is I'm looking at 2 minute, and I would flip to 5 minute to see what it is, and then I'll go back to 2 minute to see more fidelity. And if I want more fidelity, I'll go to 1 minute, because the MACD is slightly behind. What do you call latency? Is lagging. So when I go to the 1 minute, I can see it curl up faster because I'm aggressive trader.
Mhm.
So it's depend on who you are and what you are used to looking at. And you just have to practice it back and forth, and look at the signals and look at the data and see how much you can get, how much risk that you want to take. But most traders use 5 minutes and 15 minutes. I'm the 1%.
Oh,
A
okay.
little
So
outlier.
even the Bollinger Band is also like whatever the time frequency you said, right?
You can use the Bollinger Bands in any time frame.
Yeah, yeah.
It just depends on your technique. And then let me just show you a little bit of a hint on the Bollinger Bands. When you see the bands are becoming constricted, they're becoming shorter, this is actually a hint that, hey, we are getting closer to give you a better directions, either to bigger, to move to the upside or move to the downside. When they start converging, is that correct? The word converging, when they're coming together, getting closer together, and they're becoming constricted, that actually is a good indicator that, hey, this Bollinger Bands is about to explode either to the upside or to the downside. So this is actually for 5 minute. This is actually good because now we want to see, as this becoming constricted, it will give us like a hint that, hey, it's getting closer. I wonder what Tesla, there's only one direction now. Two directions. What Tesla is doing, because now we are vacillating on those little bands in here. You're gonna see a bigger move of these bands. And if you see that, that's when this candle either move above here or move downside. Again, once you see a constrictions of the Bollinger Bands, that is a signal that, hey, there is a bigger move after this constriction or divergence.
Got it. Got it. Thank
Yep.
you.
Yeah. See, when they start constricting, you see this constriction right here? It just
Right.
gives you move to the
Mhm.
downside. See this? Another
Mhm.
constriction. It gives you move to the upside. So when they start becoming close together, be careful or I don't know, because there is a big move either to the upside or to the downside. It's like a consolidation.
It's
You
it's where the institutions are trying to figure out where they want to take it.
Yeah.
Yep.
So every time they're constricting right here, there is a move either to the upside or to the downside. That's the good thing about Bollinger Bands.
So, hi Mary. Using MACD or RSI, can we predict which direction it may go?
Mm.
MACD and RSI, yeah, of course. Let's go take a look at
Let's
that.
go some example. Yes.
Okay. Actually, your RSI is right between the, it's not giving us a good direction right now, although it's slightly bullish on the upside because you are above the signal line of your RSI, and your MACD most likely it's just giving you bias too. Actually, yeah, you're right. So it's not
Yeah.
giving you a good direction, just like this is constriction, this is constricting, and your RSI just slightly move above 50. But if you want to see a bigger move of the RSI, you want to be above slightly higher, about 60%. Because this 50% could just go back down below 50, and then that comes your bear territory. Your MACD is like this one. You don't know which way it's going. Your MACD is curling above, not still on the bullish territory, because once this signal line, this blue line, reach above 0, then that means we are in the bullish territory. And if they becomes confluence, your RSI move above 50 becomes about, you see this? This is only 52. So if you want to see a bigger move for the RSI and this candle, you want to be higher than 52. You would like to create a new higher high for RSI. So it means it's confirmed, because if we hit 52 for the RSI here, and then it could give you just like, okay, we're coming down again, because they haven't given us a higher high for the RSI. RSI lines could be like a chart line too. It tells you a story, not just overbought or oversold. So if you want a bigger move, if you want a continuous move to the upside, you want to create a higher high for RSI. For MACD, you want to be above 0. And this Bollinger Bands will give us more like a bigger move, like widening it. It means the candle is going to go up here. So those are all the signals for this Bollinger Bands to move above. And if this falls, this will curl down, your MACD will reject that 0 and will continue to fall. That's the only way to tell which way you're going. So watch those RSI, your MACD tomorrow, and see where it's going. By the way, this is a 15 minutes, okay? So I don't want you to look at your 15 minutes. I want you to look at the bigger time frame to see the bigger move, because the longer the time frame it is, the significant the market move. It shows you the significant move of the market.
That
Not the 15.
histogram is there, right? In the MACD.
This one right here?
Yeah, that blue, yeah, the red and blue.
Yeah, it's
Histogram.
still very little. It's just neutral. It's not
Okay.
giving you anything yet. Once this one curl above that,
The light green comes, then
you want a dark green comes. You don't want the light green. If it's a light green, it means your
it will go
momentum is
down.
slowing down.
Okay.
You want the dark green, and you want this to climb above.
Thanks, Mary. Thanks.
Yeah, you're so bearish. Still bearish on the daily for Tesla. So let me clean that out.
Bitcoin is doing good.
Bitcoin?
Yeah, Bitcoin, and it went over 87K today, but now it retreated a little bit, few hundred point, but still pretty good. My MSTX will be looking good tomorrow to cash in.
Hope so, Antoine. I've been there with you.
Bitcoin.
I was hoping for that.
Oh, look at the Bollinger Bands. Right above it. Bollinger Band says 90.
Yeah,
Yeah.
that'd be good.
93. Well, you
I
have
need,
88.5. Oh, yep, 88,000 all the way to 91 to 94. So hopefully, and then break above this. This is, if we're gonna go ahead and follow the Bollinger Bands, what do we say? We want to be trading above the middle part of the Bollinger Bands, right? In order to be bullish. So if we're following the Bollinger Bands, we have to be above 90,000.
Yeah.
The Bollinger Bands. 92 as a matter of fact, 92,000. So above 92,000 is bullish per Bollinger Bands. Okay, now I don't like, I'm not a Bollinger Bands type of gal. I have nothing against Bollinger Bands, by the way. I just hardly use it. Okay, so I do like to follow my EMAs and MAs. To be bullish, remain above 86,826. So remain above that. And then we'll be testing your Bollinger Bands right here, 92,000.
Perfect example, Mary, of using multiple indicators.
Yep, see how confirmation to the upside too. But I want you guys to start clean. Your chart has to be clean when you look at your chart.
I mean, not like mine the other night.
No, I'm not saying anything. I just want you guys to start clean. When it comes to doing your chart, start with your supported resistance and clean chart. Because we do have, so for Bitcoin, we want to be above this bearish candle. What do we say? Half of the candle is a pullback, right? Half of the candle is a pullback. So we would like to be above half of this candle to respect this whole candle. So that, because we would like to fill it up, reach all the way to 83,000, 84,000, and then trade above this support, this resistance, as a matter of fact, and then retest that. Maybe trade it again. There's actually a higher, maybe we have this double bottom. So this is really the neckline of, well, that's nice. We have a double bottom for Bitcoin. We have a neckline. If we're using the body, it's right here. If we're using the wick is right here, respected with this candle. So, and then your second leg is all the way to 94,000. Now, after 94,000, this is your second resistance all the way here. But if this is just a pullback,
That's a tweezer bottom is also there, right? That's a tweezer bottom.
that is not a tweezer bottom. But
The next one, yeah.
71,000. Okay, hold on. This one? This?
Yeah, that too. Yes. Is it tweezer bottom?
I don't consider it tweezer bottom, but they do seem to have the same lower body. But tweezer bottom is normally the highest high or the lowest low are similar numbers. And this is on the 77,000 and this is the 74,000. This is more of a tweezer top right here because this is 88,000. This is also 88,000. You see, the highest high are almost identical. Look at this, okay? So that is 88,800. That is 88,500. So it's on the 88,000. That is a tweezer top.
Oh,
And
body instead of body, the wick should be equal, right?
it's either if you're using the tweezer bottom terminology, the highest high has to be identical to both to the two candles. If you're using tweezer bottom, you want the lowest low are identical or similar to each other.
Okay.
So
Okay.
this closes at 77,000 and this closes at 74,000. So that's kind of a big gap.
Yeah.
but they do close similar on the body. Pretty strong. Okay, so let's learn candles again. In order for this to be continued to be bullish, guess what? What do we want? We want to remain above $88,800, right? Why is that, Mary? You want the candle to be above this wick now, because the first rules was let's go ahead and break above the body, and it looks like we are breaking it today. In 6 days, we are breaking above the body of the candle. The next one, let's move above the wick. The candle has to be above the wick. We want body, not the wick. We don't want rejections. We had rejections here before. We don't want another wick here closing this week. We want the body here. Once you have the body, the next one is here. Okay. So if you see wicking, if we see wicking there, it means a rejection. What? Look at that. W, right?
Mhm.
That's why line is good to know, to see. Check it out. W, look at your candle. You could either draw your neckline here. You could either draw your neckline to the top because it was respected here. But I do like to draw the neckline on the body of my candles. But you could do whatever you want. This is a strong resistance, by the way. Why? Because it was respected multiple times as a support and now it became a resistance. So it may be a little bit harder for Bitcoin to break this. A good confirmation too, if we break the resistance, we would like to see this RSI crossing above that. Let's see our MACD. And this is the weekly. Hopefully our MACD will continue to curl up and not fall on the bearish territory. So hopefully this is now the move to the upside for Bitcoin, a continuation, because we missed that move. Let's see how much is the prediction for Bitcoin. So institution will start taking out 102 to 109. That's your 61%. People, institutions start taking profit. 130 is your top resistance, supposedly.
That'd be great.
Yeah, that will be great. Excuse me, my dog needs to go out. Hold on. Any questions, by the way? Any questions? I think we are done.
Miss Mary?
Yes.
Hi, this is Yasha. Can you check Meta for me, please?